to another edition of Pitch Brand Talk. I'm very happy to have with me today Alok Arya. He's the Chief Marketing Officer at Equentis Wealth Advisory. Equentis Health Wealth Advisory is an online equity advisory company. Alok, welcome to Pitch Brand Talk.
Thank you.
Alok, I just want to start off with the brand revamp, which you recently done in April, where the name has changed from Research and Ranking to Equentis Research and Ranking. So what was the purpose of this and, the objective of this move?
Okay, so research and ranking has have a good journey so far. I think the last 10 years were very, very encouraging for us as a business. And research and ranking actually became a household name with over a million registered people and with over 40,000 customers that we have. People started to associate with research and ranking in a way that they could trust research and ranking for the recommendations or for the portfolio services that we offered. However, we as a business felt that while we are expanding both horizontally and vertically, there was a need that we establish our brand positioning in a very, very strong manner. So we went back to the drawing board. We discussed, we deliberated that, ultimately, if an equity advisory company like ours, we stand for making trusted relationships with our customers, what should be our purpose for existence? And then we essentially, bummed up with this thought that, we actually stand for equal existence. So Equentis, which was our holding company, it actually means equal existence. EQ stands for equal and Entis is standing for existence. So we believe that wealth creation, should be actually a fundamental right, and not be restricted to a select few, specifically when it comes to the equity markets. I think India, being an exceptional growth story, we firmly believe that the participation in the markets has to increase manifold, and hence the Equentis thought of equal existence came into power, and we are ensuring that our business, while we add more business verticals, starting from private wealth, starting from going forward to AIF, PMS, etc. We want to ensure that there is a holistic brand essence, which is equal existence through and through these brands that we offer.
So how have you gone about, creating awareness about this change?
I think what we started off with is actually announcing about the rebranding, and our existing customers really appreciated the whole idea of our reinforced brand positioning with a bull at the center. Considering, like I said, we are very positive about the India growth story in the next 10-15 years. I think it's highly indexing on all parameters that we could consider. Our customers took it very positively. They really found that, okay, the purpose of Equentis and the rebranding from research and ranking, ensures that, there is an umbrella, sort of a brand which holds all the offerings of Equentis together. Our registered base of almost a million plus also, showed us very positive signs. When we did the soft launch across, email campaigns, across WhatsApp, across SMS, across OBD, we saw a lot of positivity, in terms of our engagement rates, in terms of our click rates. Those were very motivating. And of course, when we, expanded this launch into mass media, across digital, we are a digital first company. So, Facebook, Google, we were all over there. Definitely, some bit of, I would say, queries also were there, which people asked us that why is this change happening and what essentially changes for a customer. But there's nothing as such that changes for the customer. I mean, if at all anything happens, is that the overall experience gets better, right? With a cohesive brand identity, cohesive brand positioning. I think today people are far more conscious of associating, with purpose-driven brands. And like I said, with equal existence at our core, I think this rebranding has been very motivating for us.
Now, when you talk about financial services like yourself, there's always money is involved. Trust is a very important factor, but one of the bigger challenges is it's always seen as a complex product And the average user or the current consumer feels that the product is very complicated or they cannot understand. So a two-part question would be, what are the challenges and how do you solve them when it comes to communication and telling them that, this is the product and it should be with ease of communication?
No, I think it's a good question. I'll just pick up from a word that you used, trust, right? We keep saying and we keep telling this to everyone across our customers, our registered base, that we are essentially in the business of creating trusted relationships, right? Wealth creation happens later, right? We are not selling a product or a service which is which you can experience immediately, right? If you buy a product on, say example on Amazon today, you pay for it and the product is delivered. You can consume the product. Whereas in our case, it's a long drawn promise, right? It's a long drawn trust wherein we tell people that, okay, this is your risk appetite, this is your life goals. We will essentially make a customized portfolio of 20 to 25 high growth stocks just for you, which is tailor made. And across our customer segments, we find that there is a lot of I would say, I'll not say confusion, but anxiety around the markets. So when you said that people are scared, yes, people are scared to lose money. Yes, people are scared that someone will not be handling their money well, and that's precisely where Equentis comes into picture. Our research team, which has over 20 years of experience in the markets, our highly pedigreed analysts who essentially not only study the market, sitting at the desk, but also ensure that out there in the market, speaking to the management at the plants, at the factories of the companies that we recommend, right? So I think the first part of your question, I would want to answer in a way that it starts from starting a trusted relationship, first making the potential customer or anyone who's interested to know more about markets comfortable, right? We also have a edtech platform called Informed Investor, which is a big investment, and we're ramping it up in a big way. Wherein the only intent is to ensure that we educate people in a way that they can take informed decisions about their about their money, about their financial well-being. Now, the second part of your question, how do we communicate this? Like I said, everything stems from the building trusted relationships. So anything and everything that we communicate does not only tell us what markets could do to their money, but also tell us that why are they in the best hands when they associate with Equentis, and that's precisely the trust that we have gained over the last 10 years. Like I said, with over 40,000 subscribed customers today, we really take a lot of pride in saying that we've been able to establish that trust, establish that name in the market of being not only I would say, pedigree research company, but also, an organization which takes a lot of pride in making sure that our boardroom discussions are more about clients' money and clients' top line rather than our top line. So all our communications are centered around how can we make the life of our customer easier? How can we handhold the customer in his journey, in his or her journey towards long-term wealth creation?
Alok, when it comes to a product like yours, you offer a customized solution to a customized portfolio for your clients. And so basically, what I'm talking about is personalization and customer centricity. So when a person visits you for the first time, how do you ensure that your customer has a seamless experience when it comes to interacting with you?
Yeah, I think again, like I said, the core is to build a trusted relationship. So for the very first, interaction with the customer, may it be he or she coming to our website, may it be he or she interacting with one of our ads across the digital ecosystem. We first try and tell what's the best thing that could happen to a customer through us, right? It's not just about selling the product or service or subscription at the first go. First, making the customer, bringing the customer at ease, saying that, listen, we understand that you are in this anxious zone of of evaluating more like us, of creating long term wealth, but you're not sure. Like, I mean, we know that over 95% of people in India, or rather our customers also, are actually scared to lose their hard earned money. And when it comes to markets, right, stock markets in India have had a perception of being compared to gambling, being compared to quick money, or a game to sort of put in money and pull out some quick bucks. But the first task at hand for us, wherein we take a lot of pride again, is to first ease the customer and say that, listen, we understand you, right? If you see our website, we actually tell us how has the journey of the stocks been, in terms of not only our recommendations but the overall ecosystem, that how, if you are invested for the long term, you could actually create long term wealth. I mean, something becoming 10% more or 20% more is actually not wealth creation, and that's not our philosophy. So when we talk to the customer in a way that we could start from the basics, the customer feels much more less anxious, and he or she is comfortable that, okay, I am in the right hands. When it comes to communicating this across channels, we primarily use email marketing for our retention, WhatsApp, conversational commerce in a big manner. So all the touch points are streamlined in a way that the communication is consistent, in all the places. So we just not try and sell our service, but first pacify the customer down, or the potential customer down, in various means. Let them experience us, let them speak to our wealth counselors, who give them a lot of comfort, who understand their goals, who understand their objectives of entering the market. And once the customer is sort of feels home, once the customer feels that, okay, I'm speaking to the right people, then only we start with what we have to offer. Because like I said, ultimately, our boardroom discussions are more about the customer's money, right? Ultimately, if they don't make money, they will not subscribe with us, and we won't be able to survive.
Now, how do you, if you were to tell your customer why do they need an advisor, what would you say?
I think a brilliant question. In fact, our latest campaign was called as Advisor Zaruri Hai. Okay. Now, why an advisor? Okay, let me ask you a question, Simran. When you have toothache, who do you go to?
The dentist,
You'll go to the dentist. When you have maybe a stomach ache, who will you go to?
the GP,
Yes.
general
So
physician, yeah,
absolutely, the GP. I mean, touch wood, God forbid, if you say, example, break your finger, who will you go to?
an orthopedic.
Absolutely. So the answer is with you. You know, Today, for all our needs, we go to specialists, people who are domain specialists, who understand that, okay, if your finger is broken, how to fix it. Imagine if you were to go to a YouTube channel and find out how to put a plaster on your finger. Would you do that? Do that? You will not do that. And good. I mean, I quite like the fact that you are smiling also. But the point is that we often take our money for granted, our hard earned money. I meet so many people throughout the day, who tell me that, listen, I bought this stock. I said, who told you to buy this stock, or where did you experience it that this company was growing, or your money will grow? They said, my friend messaged me on WhatsApp. The other guy tells me, I saw it on a YouTube channel. The other guy tells me, there's this Instagram fin influencer, whom I follow, and he was recommending. Now, the answer to your question, that why an expert, is that picking up stocks or making a portfolio is very, very scientific. It requires a particular skill set. It requires a particular domain expertise. It requires a particular time of experience in the markets, where you can understand all the parameters. And I'm not talking about the technical parameters of charts and candles and this and that, which essentially half of the India today says that they know how to do technical analysis. We are completely against that philosophy of short term, putting in money and pulling out some more money, the other day from the market. An expert is required, or an advisor is required, so that he or she can guide you, in this long term journey. We call it a journey because we believe that there is only one way to invest, and that is long term. If someone tells you that you can make some quick money from the stock market, they are lying. And I want to put this in record. If someone tells you that, listen, in short term you can be rich through the stock market, they're lying through their teeth. The truth of the matter is that the only way to invest is long term. I mean, we've all been hearing Warren Buffets of the world, and a lot of investors that we follow. But ultimately, when it comes to our own money, we're always very, very, very anxious. We are impatient. An expert's job or an advisor's job is not only to make you less anxious, but to give you a structured approach. An advisor like us, we will first understand you inside out. We will understand what are your life goals. We will understand what is your life stage. We will understand what are your objectives, right? You will say, example, you can tell us that, Alok, I want to buy a second home in Bombay in the next 5 years. Then we exactly know that, okay, in Bombay, if you're looking to buy a home, there is a particular corpus that you will need in 5 years. Now, to build that particular corpus in 5 years, your money needs to grow at a certain rate. That certain rate will establish your risk appetite, right? Once your risk appetite is established, hence we make a customized portfolio basis your needs and basis your risk appetite, which is customized. And this is a very, very scientific process. And hence, SEBI also says that if you are, ensuring that you are trusting people with your money, you better be trusting the best. Don't get fooled by, these YouTube channels or WhatsApp forwards with your money. At least I think we spend our lifetime saving. We spend, a lot of time, energy, in ensuring that we take the best decisions. But when it comes to our financial well-being, I think there is a lot to be done. In fact, if you ask me, investment advisory as a category today does not exist. And hence, we as Equentis, we want to build this category, not only, just build, but to own this category as a thought leader, which by God's grace, we've been doing since the last 10 years. So in the next couple of months, you will see a lot of action when we launch our brand across, the mainline media, on TV, on print, on outdoors, wherein we want to bring this, I would say, paradigm shift in the way the customer thinks of an advisor. Today, nobody feels there is a need of an advisor, but essentially this category does not exist.
I believe that there's a very small percentage of Indians who actually invest in the stock market. Could you just give me what is the percentage?
See, today, I think in India, there are almost, if I'm not wrong, around 19 crore demat accounts, right? Of these 18, 19 crore demat accounts, our assumption is that almost 70% would be unique. When I say unique, a lot of people have multiple demat accounts. Say, for instance,
Okay.
have a demat account in Zerodha, Upstocks, etc., etc. I might have 2, 3 demat accounts. Of that 70% unique, another 50% or maybe 60% is active. So roughly about we are talking about a number of 5.5 crore active demat accounts, right? Also, this number is also the same number for active mutual fund portfolios. Today
Okay.
there are roughly about 5 crore actual active mutual fund portfolios. These are people who essentially do not understand the intricacies of the market, or maybe do not understand the process of how to invest in direct equities. So we are talking about net this whole ecosystem of 5 crore active mutual fund portfolio holders or active demat account holders, who are essentially the people out there who should definitely have an advisor. And we believe that if not Equentis, they should have any other pedigreed or, I would say, research based advisor. But definitely they should have an advisor so that, they can be understood, their financial needs could be understood. And it's a scientific approach rather than just hitting a dart in the air.
Now, just coming to your ad spends, can you give me an idea what is your ad spends currently, and are you looking to up the ad spends?
Definitely. So I'll not be able to quote a number here, but definitely we are one of the biggest spenders in the category. Like I said, we are a digital first company. So all our spends, almost 95% of them are on running digital ads across Facebook, across Google, across various other publishers. So we are almost ramping up by, if not less, at least 50% quarter on quarter basis. Our spends or layouts are increasing because we are ramping up. We're also ramping up our physical infrastructure because for the customers who register with us, who show interest that okay, they are interested in having an advisor, there is a big sales team of wealth counselors that gets in touch with them. to sort of not only handhold them, but to also ensure that they are, like I said, understood well and offered a customized solution. So, the media spends are definitely going to increase manifold in the next couple of years. Like I said, to build the category first and then to be the category leader in itself is a Herculean task. And we believe that media monies will be, definitely seeing an upsurge, in the next couple of years for sure.
Uh, Alok, I just want to also get a sense from you. You mentioned that you have 1 million customers on board. Which is a platform which you believe gives you the best ROI? Is it digital or how does it work? Because you mentioned that you're still not on television.
No, so we are a digital first company, like I said. Talking about the platforms, our spends are almost equally split across Google and Facebook. In terms of ROI, I think both the platforms are equally contributing. I mean, in certain months, the cost of acquisition is lower on one platform. On certain months, it might be higher. But both the platforms have different roles to play, right? So Google is more of a pull medium, and Facebook is more of a push narrative. So we ensure that our storytelling across both the platforms is both efficient and effective. I mean, from a ROI perspective, it's not just limited to calculating the cost of acquisition through Facebook and Google, but looking at the overall lifetime value of the customer, right? So once the customer is onboarded with us, there is a lot of engagement that happens across channels, including email, including WhatsApp, including outbound calling, etc. So all of the channels cohesively come together to make a seamless one consumer journey, like we call it. That consumer journey is weaved across these media platforms, and the ROI is calculated holistically. So as of today, I would say our major dependability, or I would say the highest dependability, is on Facebook and Google both. I mean, I'll not say one is more and one is less, but equal, I would say, division of media monies goes to both the platforms.
Finally, what are your plans looking ahead? And you've got a 1 million customer base. Any estimate that you would like to be see 1 year down the line? Because you mentioned you'd like to push people, especially even from the mutual funds category into the equity category. So, what are your plans looking ahead?
I think, like I said, we are just at the tip of the iceberg. With over 1 million registered base, we still feel there is a lot of work to be done in the industry and in the category. Like I said, the category needs to be built first. Then you have to establish yourselves as a category leader. On the numbers front, like I said, over 50 million people today are active in the mutual fund ecosystem. They have active mutual fund portfolio. So that's the lowest hanging fruit for a company like us, because we know that people who are essentially in the mutual funds, are any which ways maybe either scared to invest directly in the equities or maybe don't have the know-how. So they need hand-holding. So from a scale-up perspective, we are looking at, going from a 1 million base to maybe, a 5 million base very, very quickly in the next 1 or 2 year itself. From a customer's perspective, we already have around 40,000 plus subscribed users with us. We plan to take that number to 2 lakh in the next 18 months or so. So there are very, very aggressive plans that we have, and category building, category ownership, building the brand positioning very, very strongly will definitely give us that edge over a lot of the unorganized sector that we are operating in.
My final question is, see, like you mentioned, mutual funds. Amphi has played a big role in educating customers because we've seen their ads on television, on sports, and they have played a significant role when it comes to informing people to invest in mutual funds. Do you believe that the advisory industry when it comes to equity should also do this, or
So a regulator is always very, very important, and we fully advocate that. Like AMFI, we also have a regulator at at advisory space. So SEBI is playing a very, very critical role here. They are ensuring that any unforeseen activities in the market or any, I would say, not so good practices in the market are rightly flagged off. They're running a lot of campaigns for investor education and investor empowerment. They are ensuring that regular communication goes out across media channels, that how the markets could actually be really volatile, and how your wealth could be eroded if you do not take the help of a, I would say, good advisor, expert advisor in that manner. I mean, like Amphi, I think SEBI is playing that pivotal role of ensuring that the investment advisory space is not only regulated but also checked, time by time. I mean, so far so that each and every ad that we today push out, first goes for a SEBI approval, and only then it hits the market. So they are as stringent as it could be. We have regular audits, both informed and uninformed by SEBI, just to ensure that all our processes are well in place. We are ensuring that whatever we communicate to the customer is actually not an over promise. It's actually not maybe in a way misleading the customer. So I think it's playing a brilliant role here. And we, as a SEBI registered investment advisor, we take a lot of pride that we are one of the few advisors in India, with the kind of customer base that we have. Even SEBI is aware that, Equentis is one player in the market that is not only following, the regulations to the T, but also ensuring that we do business with a good intent. We are nowhere, trying to say that, okay, if SEBI has regulated, then this has to be followed like a regulation. No, that's not our philosophy. We ensure that if something comes out, in the best interest of the customer, even before SEBI flags it off, we are the first ones to pick it up. So, like I said, any regulator, be it AMFI in mutual funds or SEBI in equities market, is a welcome step, and we fully support SEBI in all the moves that it takes.
Also, the recent budget, for a lot of people who are investing their money, it has not been what it was not. What the budget was laid out was not as expected, because it was increased, whether it's long-term and short-term capital gains tax has been increased. Do you see this as a concern for your existing customer, and also trying to get new customers, especially, on board? So retention and new customers, is this a sort of concern?
No, I would not say it is a concern. In fact, we are very, very positive that the new budget that has come out is actually for the well-being of the country. I mean, long-term capital gains have always been there. I mean, till some years back, I mean, certain percentage moves actually would not matter much in long run if you're looking at a
Okay.
2-year investment horizon in the market. So I believe today investors are also very, very aware of the fact that it's not the taxes that hurt their wealth creation; it's the wrong moves that actually hurt their wealth creation. So if you ask me, business has not seen any inflection because of the budget. If at all anything has happened, is that we are growing at a much faster speed. People are more confident now that, okay, with the budget coming in, and India, like I said, is over indexing on all growth parameters. The market seems to be bullish, and it continues to be bullish. I mean, volatility is a part of the market, right? I mean, certain days it would come down by 500 points or 1,000 points. But if you have a decadal view, right? If you have a 20 years view or a 15 years view, you will. I think these are all cycles of the market. So if you're really looking at a long term horizon, if you're really looking at wealth creation, then I think these small things are not concerns. In fact, they are just checkpoints or milestones, which keep happening, and I think it's a welcome move.
Look, thank you so much for your time. It was a really insightful discussion.